Okay, so I want to welcome all of you here. This is Trading the Wide Open Spaces. You hear us talk about it, and you've been in the room for the last couple of days. You hear us talking all the time about the wide open spaces. All right, so that's what we're going to do. I'm not going to take any questions at this point in time, but I do need to read the disclaimer because we're recording this. Trading foreign exchange on margin carries a high level of risk. May not be suitable for all investors. Before deciding to trade foreign exchange, you should carefully consider your investment objectives, your level of experience, and your risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should never invest any money that you cannot afford to lose. All right? You should be aware of all the risks associated with foreign exchange trading, and seek the advice of an independent financial advisor if you have any doubts. Okay. So before I do this, though, I want to pull up everybody's asking how do I work the software. So I'm going to go pull that up here for a second, and I just want to run through it. I went through it this morning kind of fast, so I'm just going to do this real quickly here. Well, not quickly. I'm going to go slow through it, but I'm going to. It's not really part of the webinar that we had planned, but just because everybody's downloading today, I decided to do this. So understanding our charts is the key to visualizing the methodology, okay? So the charts were created so that we could show the methodology visually, all right? Trading is a visual business, all right? So when you open up your charts the first time, up there on the left-hand side, you can see it says GBP US dollar 10-minute. That's the time frame that that chart is on. And by the way, you don't change any of these screens. You don't put any settings on. It's already built in. There are nothing to do except leave them alone. All right? That's one of the reasons it says locked up in this left-hand corner. They are locked so you can't mess with them. All right? Oh, sorry. Down here in the bottom, across the bottom, you can see there are all these different currencies. All right? Each one of these there's two chart setups for each of the major currencies. Now, if you're taking a demo, you will only have the 9 currencies. You won't have all the 20 that we use. And the reason for that is, as you add currencies, every time you add a currency, you're adding 35,000 candles that have to be loaded per currency. So most of you might not have the resources on your computer to handle that, number one. All right, so we limit it to the 9 majors in a demo. Once you become a subscriber, you can add all that you want. All right. But make sure you have the resources to handle that. All right. Number 2, the demo is free to you, but it is not for us. We pay for every single candle that gets loaded on your charts, and so we have to limit that just for obvious reasons. All right. So the built-in setups are there. All you need to know right now is the RF1010 trade setup, which we're not going to go through, but if you download the demo, you saw a video on it. All right. The chart tools are up here where you can draw in the charts right there. This is where you would change the time frames, and you can change any single time frame to anything you want it to be. All right. All right. Over here are proprietary oscillators. They are not slow stochastic. They're not RVIs or none of that. It's a proprietary oscillator that Jerry, my partner, who is a computer genius, invented. All right. We are watching 3 different time frames simultaneously because they feed us information. We are not indicator junkies, all right? We do not trade indicators, but we use indicators to feed us information, all right? And when all 3 of these time frames, the 5-minute is where the scalpers are, the 30-minute is where the intraday traders are, right? This is the scalpers, these are the intraday traders, and the 240 is where the big boys are, all right? So if all these are green going up, what does that mean? The scalpers are buying, the intraday traders are buying, and the big boys are buying. And we have a saying that makes it very easy to understand. If it looks like a duck, quacks like a duck, walks like a duck, it's probably a duck. So if all 3 of these are going up, it's probably a long. All right. Now, down across the bottom here is what we call the 3 musketeers. There are 3 charts that are designed to not show you the noise. All right, they don't show the up and down movements. They show the movement one way or the other as the market tries to trend. All right, so when those 3 are in harmony, once again, why do we care about these? The big boys analyze on the 240, but they enter on the 60. So as you can see right here in this chart, the big boys are sellers and the big boys are actively selling. And everybody see that? They're actively placing trades on the 60-minute chart. All right? So our trade setup comes from the 10-minute chart right here. We catch these moves is what we're looking for. Those kind of moves right there inside the big boys movement. All right? So you can see that that movement I'm circling right over here matches this one right here. All right? But we had a heads up because we knew the big boys were selling. All right? So they're very important. They're not tradable information, but they are information. All right? Now, on the 10-minute chart, the only thing on the 10-minute chart that is from the 10-minute is the candles themselves. Nothing else comes from the candles. All right? Now, up there on the left, it says locked. We got about 200 emails today saying my charts are locked. That's because they're supposed to be locked. All right? They are supposed to be locked so that you can't go in there and say, well, I don't like it. I like a slow stochastic at this setting, man. We don't mess with these. These have not been optimized since 2004 because they work. Don't try to mess with them. All right. One thing you can see real quickly is there's some other things on here. There's a MACD down here on a 10-minute chart. That's a 60-minute MACD. There's a red moving average right here. That comes from the 240 world. All right. There's a green one right here. That comes from a 60-minute world. You'll see a moving average right in here. A little red one right in here. That's from the 30-minute world. All right. So nothing on this chart but the candles comes from the 10-minute world. Why? Because we have to trade the bigger charts, but we can't trade the bigger charts with the stops on the bigger charts. So what do? We force you to trade the bigger charts, but we allow you to trade on the 10-minute so you can put a smaller stop. All right. Now, blowing this up a little bit bigger. All right. Once again, this is the area we call the desert. On a 10-minute chart, it's only found on the 10-minute chart. When we are below the moving averages on the 240 chart, we have more sellers than buyers. When we're below the moving average on the 60-minute chart, which are where the big boys enter, we have more sellers than buyers. When we're below that moving average, both of those moving averages, we have more sellers than buyers, and it's almost impossible, unless they're going to reverse the market, for them to overwhelm the sellers and go the other way. And so the trades are always to the downside when we're below it. Just the opposite going up. If we had those two moving averages going up, we would be above both moving averages. We'd have more buyers than sellers. Okay? So the desert is the most dangerous place to trade, in between the moving averages, because we don't know if we have more buyers or have more sellers. All right? And we do have a trade setup. It's called a 6 aces for when we absolutely know they're reversing. Then we do have a trade setup for that. But we don't want to learn that in the beginning. It's a more advanced trade. You have to be a pretty good trader to trade reversals. All right. Now, you can see right here, there are unpainted candles. We have candles with black outlines. Those candles right there have price action, but no momentum. Nothing is driving those candles either up or down. They're just oscillating up and down. All right. Now, over here you see bright painted candles with an arrow on the top first one. You also see the white dot. Now, white dot we'll talk about in a minute. But brightly painted red candles going down means momentum is in there, pushing the currency to its target. All right. The other thing you can see is that we have these little blue lines, which is a grid. This grid comes off the pivot point, and the market knows right where these things are. It knows right where they are because it's off the pivot point. All right. It is an interim target. The thing is that we don't want to take a trade right into one because they are bounce points, as you can see right here. That bounced off this T30 and went straight up. So if this trade, if we got a trade signal right here, we would not take that trade, but wait for the break and the hook and the go. Everybody see that? There we go. All right. So there we go. All right. Now, when the white dot shows up at the correct time of day, that means it has to be in the first 2 hours of the session. It can't be before the session. It can't be after the session. It has to be in the first 2 hours of the session. The white dot is actually this arrow and painted candle that you see here on a 60-minute chart. Who enters on the 60-minute chart? The big boys. When the big boys enter with that kind of momentum, we bring that information down to you on the 10-minute chart so you don't have to go find it. All right, that tells you big boys are here. I am interested in this trade, and their anticipated movement is 55 pips. All right. Don't forget the MACD on a 10-minute chart is a 60-minute brought down. So if you're looking for divergence, you can't do it on this chart. That's why we have a 6 aces where you can do that at. All right. T30s are interim targets. Don't take a trade into one. It comes from the pivot point. All right. All right, now everything else that goes on the chart is what makes a trader, and that's what we're going to do in the rest of this webinar in just a minute. The targets, we use the HSI tool. It's a tool that we invented to find the targets. It measures the waves. Now, we're not Elliott wavers, and so we're not, you know, this is a one wave, a two wave, a three wave. We're just looking for the waves that are moving. That's all we really care about, okay? But we use it to find the targets in each wave, and there's a maximum of 3 times we can use it. The fibs, we use them from the 240 chart. They are the big boys' targets. The trend, that is your job to find it. It is on the 240 chart. PSR stands for previous support or resistance. PSR. It is found on the 240 chart. I'll show you that all this a little later here. The 60-minute fibs we use to find the roadmap to move our stop. And here we use a swing high, swing low from a 60-minute chart. Why 60? Because that's where the big boys are. And we find the Fibonacci extensions on the way to the target, and that is where we move our stop. There's no such thing as us putting a 15-pip trailing stop on. If you put a 15-pip trailing stop on your currency, I guarantee you will be stopped out. All right? And we don't click out for 5. All right. So, anybody got any questions on that? I'll open that out. Let's open that up for discussion real quick, Pip. So, if you got questions on what we just went through, you can type them in there, and I'll try to answer them for you. Yeah, about the moving average. Okay, hold on. Let me go to a live chart. So let me go over here to a wild card. This is the screen that comes with it and allows us to watch the 10-minute charts side by side. Okay, so let me put this up here and you can see. All right, on a 10-minute chart, right here. Go back over here. All right. So here's the area where we were in the desert. Right here. See, we don't know if we have more buyers than sellers, and see they're bouncing around. This is why traders lose their money in the desert, because the market doesn't know if it has more sellers than buyers. But when we get a break, a hook, and a go, we now know we're probably a seller right over here. As long as we stay below both of these moving averages, all right, so there we weren't, we came back up, and now we're back down below. These are our trade opportunities. Pull back, all right, stay below the moving averages, right here's the desert, down we go, all right. So when you look at it from this standpoint, if this is the moving average and virtually the trend on the 240 chart, and if this is the 60-minute, all right, below here we have more sellers than buyers, and you can see the result of having more sellers than buyers. All right. Yellow lines are just don't-chin channels. They're just to show you the bottom, so you don't have to go find it. You can find it anywhere. All right. That's the bottom that's got to be broken if they come down. See, that's the bottom they got to break if they're coming down. That's the bottom they got to break if they're coming down. It's a 240-minute chart. That's what a 240 is, okay? All right, so and you know why, Derek, you don't have them on MT4? Because they don't want you to have them on MT4, all right? That's why, and that's why you can't use those charts. We couldn't use MT4. We tried to, but we couldn't use them, all right? The 2 moving averages is red and green ones right here. See? This big green one right there coming down, and this big red one right here. So here's the red one, here's the green one. All right. When I'm below both of them, that's why we get these kind of moves right here. And see, those moves we won't miss because we're target traders. All right. And we get a sideways move over to the moving average. If they bounce in here, we're in trouble. All right. What happens? Down they go. Why? They've got more sellers than buyers. You see that? All right. It's just a visual on here to tell you that the market is trying to go one way or the other. That's all. It's just a visual. All right. So time frame is where's the top and the bottom for the HSI. So let's go up here. Let me scrunch this up just so I can find the top. All right, can we find the top up here? Here we go. There's the top right here. There's a top up here, but that's part of the up move. This is where the down move started. All right, that's the start of the next wave. I'll put the HSI on here, and I'll tell it I'm a seller. Okay. All right, and that tells me where the first target is. Notice I knew that where that is. Tells me where the second target is. So after the pullback and I get a breakdown below here, I go right to the second target. See? All right. And I get a pullback again. If I break down below here, now we're going to the next one. Right there. See? All right. Everybody see that? These are live charts, folks. The blue line is called a T3, and it is another trending indicator. It is a moving average, but it's a very, very special moving average, okay? 240 is the 4-hour chart. Yeah, 240 minutes is 4 hours, right, Franco? Okay. All right. So I'm on a 10-minute time frame. That's what I'm on. All right. So there we go. And see, the market knows right where they are. They may blow through them, but they know where they are, and they become targets for us, okay? We don't tell you those as a secret, LK. All right. They're on the demo chart already. Already on. You have full service chart. You have the same charts I got. The only thing is I got 10 more currencies. They're already there. Can I do the white lines again? Let's do the up move, okay? So here's an up move. Let me take everything off of here. Remove all the tools. All right. And let's see if we can find the up move. Here's the bottom. So I just put it on here and say, go find the targets. Boom. So what do we got? Right up to the first one, up to the second one, up to the third one. And it's these wide open areas where we will make trades. We won't make the trades in this junk stuff there. That's not where you make a trade. You make a trade when you got a wide open space. All right. We will, Victor. You apply it at the top or the bottom, Isaac, whichever way you're going. Wherever you can find the bottom or the top. If you see it on a 10-minute chart, you got it. If you got to go to 60, you got it. You got to go to 240, you got it. If you got to go to the day, you got it. Where's the bottom? That's what you got to find. Where is the bottom if you're going up? Where is the top if you're going up? All right? Going down. All right? So, that's correct, Aman. Very good. Everybody read what Aman has written. The value is your knowledge, not the HSI. The HSI is a tool that you use to give you information so that you can make good decisions. All right? It's just a tool. It's the same reason you use a Fibonacci retracement tool. Why do you do that? Because it gives you information you can't get any other way. All right? Same exact thing. All right? So it's just a matter of doing that. You've got a video on how to do all this, okay? If you see, how do you enter if the T30s are close? You wait for it to break, John, because it's a bounce point. Let me go over here and show you. All right, let's go to current. All right, we'll see if we have one here. All right. So take a look at this one right here. All right. There you got 2 arrows, painted candles, and a white dot. Break in the 5200 and right down into there. It's slammed right into that and pulled right back up. You see that? And you see that? The place to take it, is that a trade setup? Yes, it's a trade setup. Is it a trade? No, because you're right here. All right. Now, when you pull back up and now you get that one, a break of this T30, that's when you're in. And you're in all the way down. That's a 60-foot trade right there. See that? We use an aggregated feed, Mitchell. Yeah, HSI is this little tool that we have. It's right here. Little tool that we just click and find a top, say sell. And it finds the targets. Okay? The market moves on these numbers. I didn't even find the top. I just grabbed the top, and you notice that the market moved right to those numbers. See? So, so that's how you do. You have to wait for the break of that. Now, as you become more advanced, you'll learn how to take the pullback. All right? Right now, for most retail traders, a pullback or a retracement scares the snot out of you. When you become a trader and you know what your knowledge is and you've got a handle on that, retracements and pullbacks become your friends. All right? The HSI is a tool that we use that we invented. We're the only ones that have it. There is no other one in the world except ours. All right? All right, so I'm just showing you how to use the charts, things that we do. I don't want to get bogged down in here, folks, but I just wanted to give a real quick thing on this. So because you got a video on how to do it, you got a video to do that, and how do you put the lines on your charts, all that kind of stuff. But sometimes live is a little easier. All right, so that's what I'm doing, is showing you that. All right. So the trade we had, let's see, this morning we had the EJ trade for 60 pips. All right. So 60 pips right here. There's the EJ trade. All right. Can we all see? Let me pull this down to the 10-minute chart. All right. So there's where the break and the hook took place. We can't take it because we're right in the 149. So you have to wait till it breaks and hooks the 149. All right. All right. So where does it go? Right up to that target, and right up, then right up to the next target, and kept on going right on up. All right. So at that time, when this all happened, you can see what this looked like over here. This would have looked like something like that. This would have looked like 1 over 4 hours ago, right there. This would have looked like this. Yeah, come on. Something like that, like that. Can we see the harmony showing? If it's walks like a duck, cracks like a duck, looks like a duck, it's probably a duck. If it's going long, going long, going long, going long, going long, going long, it's probably going long. Okay? Very simple to see that. All right. All right, I want to get bogged down in there. That's just real quick. You will get the video, so you'll be able to go back through this on your own time. All right? So let me go over here. I get the right one. All right, so there are many ways to trade the Forex. If we close down the chat now, I'm not going to take any more questions till we get through the presentation, and we'll ask questions when we get in live charts, okay? Because we get bogged down here and we can't get through the PowerPoint, all right? So you need to understand, absorb like a sponge, and then when you're absorbing like a sponge, you'll be able to do it, okay? All right, thank you. All right. Many ways to trade the Forex. One is swing trading. Occasionally we swing trade because the trade we get into ends up being a swing trade. Scalping. We never scalp, ever. Range trading. We can range trade. Position trading. Some of our trades end up being position trades. And target trading. That is what we do. We are target traders. All right. So why do most traders fail? Because they cut their winners short, but they let their losers run. All right, so let's just take a minute to understand what we need to know to target trade the Forex. All right, so how do we remember what we got to know? It's a little acrostic. Trade for pips daily. Is that not what we want to do? We want to trade for pips daily. All right, the first letter of that saying stands for something we have to know every day. The T stands for the trend. F stands for the Fibonacci values. P stands for the PSRs, or previous support and resistance. And D stands for divergence, which means the end is near. All right? I got to know those four things before I can trade in a currency. So we got to know the prevailing trend. All right? That may be going down. All right? But the trend of the day may be going opposite of that. All right? So we have to know where we are in the trend and what is it trying to do. All right? When the trend of the day matches the prevailing trend, we will find wide open spaces that are tradable. So when we get over here, the trend of the day was up. As soon as it turns to the downside in a prevailing trend that is going down, we will find wide open spaces that are tradable. All right? We then need to know the previous support or resistance. We need to know fibs, big picture, 240 world, and also the small, the 60 world, so that we can find the roadmap. Is divergence in the market? That means that it may not go very far. Patterns that are influencing the traders. Are there wedges? Are there rising wedges, falling wedges, triangles, symmetrical triangles, pennants, bear flags, bull flags, head and shoulders, inverse head and shoulders? All those patterns influence the traders and their ability to make a trade. What are the most important targets? They are PSRs. So let's understand them. So this is a little illustration I came up with to try to make this clear in your mind. When you're trading in a market, you are always on the second floor, just like you lived on a second floor of a 3-story apartment. All right. Now, if I live on the second floor and I'm going up in an uptrend and I want to find where my ceiling is, I don't know where my ceiling is, but if I can find the guy who lives above me's floor, I will find my ceiling. All right. If I'm in a downtrend and I want to find my floor, I can't find my floor, but if I can find the girl who lives below me in that apartment below me, and I find her ceiling, then I will find my floor. All right? So that's a way to keep it straight in your head. All right? So I've done some charts here just to show it to you. All right? So you can see I have marked the supports going up. All right? You can see those are the supports, and I drew the vertical line into the future. All right? Now, all I'm going to do is going to go into the future, all right? So these supports are going to be ceilings in the future in an uptrend. So what are we looking for? We're looking for one candle that sticks its wick down, and two to the left, and two to the right, unless we have twins. If you have a set of twins, sisters, railroad tracks, whatever you call them, if you have twins, then they act as one candle, all right? So that's support. What is resistance? Just the opposite of that. All right. So all I've done now is I've gone into the future where these lines were. All right. And you can see the market knew where that was. It 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 knew where that was. And it knew where that was. All right. Those were the ceilings. All right. Those are where the market is trying to go. All right. So we're going to trade these wide open spaces. Okay. There's a wide open space there. There's another big wide open space here. Now, they have had a big movement up, so what do? They retrace. This is why I say when you become an advanced trader, the retracement is your friend, because as it came up here, it took this target out and it took this target out. So when it retraces to here, where's my next target? Here. This is the one they didn't take out. See, they took this one and this one out, so that's why it went like that. Can everybody see that? What did it do? The whole way to the next target, because those two targets were taken out. All right. All right. Then we have an effort to go to the next one. Here's an effort to try to get to this next target. They do not have enough buyers to get there. So what do? They do an A, B, C retracement down to the bottom. All right. Now, in this case, this target's out, this target's out. This becomes our next target right here. All right. So let's see what they do. Boom. Up they go. That's your opportunity. They go ahead and keep going to the next target. So you see that. Then they pull back. Once again, these targets have been taken out. Our next target is now this one right here. All right, up to here. Come on, drawer. Right here. So from here to here, yes, these are barriers, but they're no longer targets. They've been taken out. There's our trade. It's a huge wide open space. And what do? The market takes them, because this is what market makers do. This is what bankers do. They define the area where they can risk somebody else's money. All right? They're risking millions of dollars, not two-lot minis like you guys are. They're risking millions of dollars, typically 20,000 standard lots. All right? They can't trade little dinky trades for that. All right? So that gave us this huge opportunity right here. And as you can see, there was another one up there. All right? So what is important? In an uptrend, we care only about the past support, because they will be our new resistance as long as we're in that same price area. In a downtrend, we care only about the past resistance. They will now be our new supports in the same price area. And this is why traders have a hard time with it. When you say past support is going to be resistance, your brain resists that. I learned Spanish when I was 40 years old. And for 40 years, I called garbage, garbage. And I learned Spanish, and they said, it's no longer garbage, it's basura. I said, my brain said, no, it's garbage. It said, no, it's basura. And it takes a while for your brain to understand it can be basura and it can be garbage. Both are correct. All right? So this is all about trading those wide open spaces. So the keys to successful trading are you have to know the trend. If that's the first start. If you don't know the trend, you don't know where to look for the targets. Are you going to look for them up, or are you going to look for them down? We have to know the fibs, because that's part of the big boys' targets. We have to know the previous support and resistance level. The above targets are only found on a 240-minute chart. All right? We have to have strict margin management. We never risk more than 2% of our account. How much is that? That's $20 for every $1,000 you have in your account. You can risk $20. So if you have $1,000 in there, and you put on a trade, and you use a mini, the most your stop can be is 20 pips. If you put a 20 pip stop on, you will most likely get stopped out, which means that you automatically know that you have to trade micros. You trade your trade setup when the opportunity arises in those wide open spaces, and you go for the targets. The targets are from the 240, so time is a factor. If we're taking the targets off a 240 chart or a 4-hour chart, and we're down here trading for the next 2 hours, we can automatically see we might have a time factor. The target may be a 4-hour target, and it may take 4 hours to get there, but we're only going to trade for the first 2 to 2.5 hours of the session. All right? Don't expect your trade to exceed its average true range just because you have a trade setup and found the target. If the average true range of a currency, when you're in the room, you'll see Pip is posting them for you. The ATR of this currency is 109 pips. Well, if our target is 2 pips away and it only does 109 pips in a day, we now know it's a 2-day trade, and that would be a position trade. All right. If the ATR is 109 pips and we've already done 60 pips, but our target is still 60 pips away, we could see that we could still get to that before that we run out of time. All right. Now, if you knew the targets, you can make great risk and reward trades. And unless you know the target and the stop loss, you cannot assess true risk and reward. It's not possible. All right? So if you don't know the risk and reward, you are not a trader. You're a gambler. If you knew the targets, you would always trade with at least a 1-to-1, 1-to-2, or 1-to-3 risk to reward ratio. You would never mess around with those little dinky, stupid trades. If you knew the targets, you would not trade right into a target and get slammed, get stopped out, and then blame your broker. The doggone broker stopped me out again. No, you traded right into a target, a big voice target. Why? Because you didn't have it on your charts. If you knew the targets, you would trade only in the wide open spaces. You would conserve your margin for the most opportune area to trade. And that means you have to learn to wait for your trade to come to you. All right? Now, traders spend way more time and emphasis on trying to find a trade than they do managing and exiting the trade, because they major in the entry and they minor in the exit or the target. So they bail as soon as the currency starts to bail and go the opposite way, instead of realizing the market rarely goes straight up to the target. What does it do? It goes up, down, up, down, up, down, and eventually gets to the target. Instead of realizing that, as soon as it starts to go against you, you're up 9 pips, and it starts to go against you. Oh no, it's going down. Oh man, it's going. Oh, it's down to 7 pips. I'm clicking it out. Bam, clicked it out. Yes, I'm a winner. I just made 7 pips. Yes, the market did not beat me today. And what happened? You just won the battle. You had a winning trade, but you just lost the war. Now you've got to be 90% correct for the rest of your life, which is not possible unless you're the greatest trader on the planet. And I doubt that any of you here are the greatest trader on the planet. And that includes me. So let's understand trends. A trend is easy to figure out because you can look at your watch. A downtrend is 10 to 4 on a watch. That is sustainable. It's can be no greater than 45 degrees. It can be less than 45 degrees, but it can't be greater than 45 degrees. An uptrend is 8 to 2. All right? So the market does this inside. Inside the market, it pops up, goes like that, comes back down. Pops up, goes back down. Pops up, down, up like this. Is that not how the market goes? That's how it works a trend, all right? So we're crazy if we don't expect them to retrace, because they have to retrace because they don't have any buyers who will buy at the top, at least not professionals. Dumb money will do it all day long, but professionals will not, all right? So this trend is sustainable, but the moves inside the trend are not. That's why it's critical to know where the target is and how to move your stops, all right? So let's go to a chart here and take a look. All right. So you can see I have a trend to the downside and a trend to the upside. All right. Very simple. All right. Now, you've got to get the trend right first, or you won't know where to find the targets. All right. So if you're down in this area right here and you don't have the trend right down in here, and you haven't seen the turn and you don't see it right here, you're still looking for targets down here, and the market has already made the turn to the upside. See that? All right. So the thrust inside that trend are all unsustainable, but the trend is sustainable. All right. So you can see that right here. That's an unsustainable thrust. There's an unsustainable thrust. There's an unsustainable thrust. There's an unsustainable thrust. All right. Those are. Why did those happen? All right. Let me show you. I'm just going to simply put the targets on the same move. There they are. I've just used our HSI tool. Can we all see? There's a wide open space. There's a wide open space. Resistance break there. There's the wide open space. Everybody see that? Another one up here, up to the day chart top. See, it is those unsustainable moves where our opportunity exists. And what happens to traders is, rather than waiting for this thrust that's going to go right to the target, right to the target, right to the target, they trade in this crap, and 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 they get lost, and they get whacked, and they don't understand, and they blame the broker. The broker took my stop again. The broker didn't take your stop. He does not care about your 2-lot mini or micro. All right? What happens is you don't know where the market's going. You don't know where you should put the trade on. So that's what this webinar is about, is to teach you how to find these wide open spaces where the greatest opportunity for reward with the least amount of risk is. All right? So, can we know the targets? Yes. Watch. All right, so here's this uptrend we just had. So we're going to go back and show how to find the target. So there's the old trend, and this is the possible start of a new trend right here. So what do we have to do? We have to wait till it's no longer a false breakout. How do we wait for that? It's a break, a hook, and then a go. All right, so we'll put the targets on here. All right, these are the interim fib targets from the swing high to the swing low. All right, the swing high to the swing low. Notice I'm on a 240 chart. That's where the big boys are trading. They don't see a 10-minute chart where you are, or a 5-minute, or a 15. They're never looking at that. All right? So there's the interim targets. All right? Now, the wide open spaces are the unsustainable areas in between the targets. All right? Now, we have a proprietary target tool. It's called the HSI. All right, and it finds the targets. But what it has built into it is Fibonacci ratios and historical support and resistance. Both of those algorithms are running in it, but what it is gathering is classic technical analysis. Just like when you use a retracement key on a Fibonacci, you can go do that with a calculator if you want to, but why not use a Fibonacci key which will plot it for you automatically. All right, so that's it. So I put them on here, and you can see there's the R3, there's the R4, and there's the R5. Now, in a live trading environment, we would actually put the actual PSRs. I will do that live for you. I'm just trying to get through the PowerPoint so we can absorb the sponge, and then we're going to go live in the charts, and I'm going to prove it to you. All right, so we can see right now where the wide open spaces were. All right. There's a wide open space. All right. Now, what happens is they hit the target exactly, and they pulled back. Why? They don't have enough buyers. All right. They don't have enough buyers to go to the next target, but they did take the target out. All right. So when they take the target out right here, and they pull back to here, we now know that's no longer the target. That's the target, and that's the upper target right there. All right. So what do? They make the first one again. All right, then we get a break one more time. All right, they make a break, and they're unsuccessful to get to the target. They pull all the way back down to here. All right, now this target is gone, and this target is still viable because we didn't hit it, and that's the overall target. And what do they do this time? Man, the unsustainable thrusts occur in those wide open spaces, and where does it go? Right to the targets. They try one more time to break it up here. Not successful. Now we know that that's the top. And what was the result of that? We're going the other way. All right. So let's do a down move. All right. So same thing. All right. So here's a down move. We can see it. By the way, this is how you practice it. You go practice a move that's already happened so that you can see if you can find their targets. All right. So we're going to take this back to where it started. Right now it could be a false breakout. We need a break, hook, and go. And then we know it's no longer a false breakout. All right. So I put the fibs on. All right. The interim targets. All right. This is going to be important to know why we used to have the fibs on. And I then put on the HSI. Now, again, in a live environment, we'd have the actual PSRs. All right. So here's the target right here. The next target from where we are is the R4, and the last target is down here based on the HSI. All right. So what did the market do? All right. The first trade occurred, went right down to that target. All right. Then they pulled back. All right. And they pulled back, and they went and did it again. They were not successful. They did finally break through here. As you can see right here, they break through. That's complete. We're going down to this target, but they don't have enough sellers to do it. So what do? They go back up to find the sellers, because professional sellers won't sell at the bottom. Professional sellers will sell at the top. All right? So what did they do when they got up there? Boom, they made the trade again. All right? Now, try it one more time to break it. Go into the S5. They were not successful. This is why you got to use fibs as well as HSIs and PSRs. Because in this case, it was the 786 was the bottom. They couldn't get to the S5. All right? And so that told us where it was. This was our target, but now we know it won't get there, and the result is a complete reversal right there. All right? So let's review this one more time. All right? As you can see, I have put on the supports over here on this chart. All those supports. Now, the reason I have this arrow here to show you this move right here is because when I go to the future, I want you to be able to see this so you know that I didn't make this up. All right, so I'm going to click into the future, and you can see there's that same move where the arrow is. Okay. Now, these lines to the downside don't mean anything because they were supports in the past, but they mean everything in the move to the upside. So there they are, there they are, there they are, there they are, and there they are. And at the space between those lines is where your trade exists. It is the only place your trade exists. All right? That's what happens to retail traders. Retail traders trade anywhere. The candles are moving, man. I'm in. And you may have just traded right into those blue lines that I found here. You don't know that it's there. You get whacked. The market retracts, reverses off that, goes back down to find more buyers, and what do you get? Stopped out on the way. And you blame the broker. All right? Now, this is a Federal Express logo. Almost everybody in the world has seen a Federal Express logo. The question is, can you find the arrow? Look at it for a minute. I'll show it to you. It's right there. Now, if you have never, ever seen the arrow in a Federal Express logo, you will never look at the arrow again, the Federal Express logo again, without seeing the arrow. Never again will you, because it's been shown to you now. That is what a trade setup is. It's in the middle of something. It's hidden. It's a piece of information that says, we are going to go now. All right? So it doesn't matter at this point what your trade setup is. Okay? It doesn't matter. I'll show you ours in a minute. What matters is that you recognize that a trade setup is not a trade. It may be a trade. It may not be. But it is definitely something we're going to look at if we're entering a wide open space. If we're not in a wide open space, we could care less how many trade signals we get. All right? So in the 10-minute world, you can see that these are our trade setups, those little arrow and painted candles right here. These are our trade setups right here, which says sell, 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 sell. All right? You can see the wide open space was right there, and they went to it. The next wide open space was right there, and they went right to it. The next wide open space was right there, and they went right to it, all the way through it, because they'd already taken these targets out. Now, if you knew those targets were there, would you have the confidence to trade and stay into the targets if you knew where they were? See? And would you know not to trade these signals because you're trading right into a target? You see the difference? A trade setup is not a trade. And most of you, if you could take this trade away, if you could take your last year's trading or the last 6 months of your trading, and you would never make those trades again, right here, what would your margin account look like when you didn't have 500 bad trades in it? It would be dramatically different. All right? So we're going to do it in a live chart, and we will open up the chat here. Does anybody have any questions, first of all, on the PowerPoint? All right. All right. Should be open now if you want to type. Okay, it looks like nobody has any questions. Okay, that's good. Fantastic. All right, so let's go in a live chart here. I'm going to go over to a wild card where I can draw. All right. Okay, thank you. Oh, they just showed up. Okay. Let me see where we're at. Things are coming in right now. All right. So let me hold up for a second Lines from an uptrend are taken as support. Lines from a downtrend on a downtrend are taken from resistance band. Correct. PSRs are on the 240 chart. Exactly. Any meaning why they know? It just tells you that it's flip-flopping. If it's on the top, then the red is on the top, you have probably more sellers than buyers. If you have the red on the bottom, you probably have more buyers than sellers. But you can't prove that till you get to 60 or the green one. All right. I'm going to show you that, Dara. Okay. All right. Yes, you will get a recording of this. We are recording it, so don't worry. You know, that's the whole purpose, is you'll be able to go back and watch it 3 or 4 times. Okay. So everybody remember, this is recorded. You don't need to ask if it's recorded again. All right. It means that that money did come in. It doesn't mean that it's still in. All right. All right. So how do you put on an HSI? I'm going to show you right here. Okay. I think we got them all answered there. All right. Don't ask the question again about whether it's recorded. It is recorded. All right. So I'm going to go to a chart here, and we'll just take a chart. You pick a chart. Pick a chart of the majors. All right. I'll tell you all that. I'll tell you all that. Aussie dollar. Okay. First one gets it. We're the Aussie dollar. Up to a 240 chart. All right. It's pretty easy to see we're at the trend right here. All right. So what I want to do is I want to show you how to practice it. Okay. Yes. Same thing, Joe. I want to show you how to practice it. You take an area like right from here to here. I'm going to take that area from here, this whole area here, and I'm going to find the top, so I know where to look in the past, and to the bottom. All right. And I'm going to see if I can find the targets for this move. All right. That's what I'm going to see. Can I find the targets for this move? All right. So I'm going back in time, and I'm pretending here. Okay. See, if I break this line right here, I'm below both moving averages. Can everybody see that? Here's the red moving average. There's the green moving average. I'm below both of those moving averages. If I can break this right here, we're going to the downside. All right. That's what tells you. Break, hook, and go, and we're going. All right. So I need to go back in the past. I need to find my floor. Do I need to find my floor? Yeah, I need to find my floor. I don't know where my floor is. Where's my floor? It's wherever the ceiling is on the girl who lives in the past. I got to find a downtrend in the past and find her ceiling, then I will find my floor. I go back over here, over here, over here. I'm looking for a downtrend. Okay, I got a little downtrend right here. All right, so let's make this bigger. I'll make the candles bigger so you can see them. All right, there we go. All right, so I'm looking for one candle that sticks up with 2 to the left and 2 to the right, and in the case of twins, I got to have 2 candles. All right, that's what I'm looking for. They have to continue the move. All right, so here's a top right here. There's a set of right there. There's a set of twins right there, and it creates a lower low. All right, now this is when the Donchin channel really helps you out right here. All right, because it shows you that it created a lower low. All right, then I got another one right here that created this lower low. Then I got this one right here that didn't create a lower low. You notice that? It didn't create a lower low, but this one does. So I can't use that one. I can use this one. All right. This one right here, set of triplets, actually, that created a lower low. Another one right here created this lower low. This one created this lower low. This one created that lower low, as well as this one. See, that one created a lower low right there. So those are the ones I'll take for now. All right. So I'm just showing you where I'm getting them. Right there's one. There's another, oh, there's one right there. I almost missed that one. There's one right there. There's one right here. No, I can't use that one. I can use this one right here. I can use this one, this one, and that's it right there. All right. Now, I got a problem because I still got room down to here. I got to go even lower. Do I have any more? Yes, I do. I see I got one right here. This one creates that lower low all the way there, as well as this one creates a lower low. I still have a big space here, so now I still got to go back in the past and see if I can find a low over here. I can't find a low over here, so I'm going to have to go to the day chart and see if I can find a downtrend that will give me that space in here. So I'm looking for a downtrend over in this big wide open space because that's too big a space. I'm looking for a downtrend, and hooray, I find one right here. See, that's it. All right, so I'm looking for a place where I can find a support. A resistance, and I don't have any here. I don't have any here at all. So that's going to be a problem for me. Let's see if I can find another one here. All right, here we go. These are making lower lows, as you can see, so we can take these. All right, so I got a top right here. I got this one creates this lower low. That twin created that lower low. These triplets created that lower low, and we're good. All right, that takes us to the bottom. Still got this wide open space here. I sure would like to find one in there. If I don't, I have to use fibs. All right. Okay. Now, I'm going to go down to a 60-minute chart so we can see this. All right. Going back in the past, finding the spot where we drew. All right. So we're going back to the top where we started this whole thing, over here. Now, what I know right now is this. When I come down and I break into here, I know the areas I will trade. That wide open space, that wide open space. I do not want to miss this big wide open space right here. All right. That wide open space, that wide open space, I will not trade that one. All right. Unless they take it out, pull back up, and then go. All right. So I know this already, all the way down to the bottom. All right. So let's see what they do. All right. You think they knew where that one was? Oh, gee, that Scott is so lucky. Went right to that thing. That was the area where you could make the trade. That was the wide open space. The big boys all recognized it because these are their lines, folks. If you don't have their lines on, you got nothing. You got your lines. They're worthless. Get their lines, all right? And if we can break this, we're going to the next one. Oh, gee, did it again. That's 2 in a row right there, all right? Get a little pullback, that target's taken out. Where's my next target? All the way down here. Now, here's where we would need a fib. We have too big an area here. So this is where we would need a fib. So we would just put a fib on here from the swing high to the swing low. Oh, sorry. Get the right key. Swing high to the swing low. And that gives me this target in between and this target in between. A Fibonacci for this big wide open area. But I'm targeting this and moving my stop here and moving my stop here. Now you see how hard that was. It was not hard. All I did was find a swing high and a swing low with Fibonacci extensions and found where they were going. All right. So now let's watch what happens when the currency moves through here. All right. Got a big pullback. Remember, this target is already gone. So our target is all the way down to here. All right. So up we go. We got a nice pullback. That target's gone. We now have a bigger space than ever. All right. All right. Notice where they went. Right down to the fib. Break that. That's where we're going to move our stop. All right. We're going to move our stop so we don't get stopped out. We go break even. All right. So we end up with a break even trade on this because we moved our stop to break even. But we now got a pullback, and what do? Bam. Right down to it. Look at that trade. Look at this. Why did that happen? Because there's a wide open space with nothing to stop it. You see that? That's why. All right. Down to the next one. All right. We can't quite get there. Why did we stop? Can everybody see? Why did we stop? Even number 150. That's what stopped the market. That's why we don't trade in those numbers. We'll trade as long as we're in this trade, but we're going to move our stop at that even number right there. Then where they turn right down, go right to the next target. All right. Where are we going to go now? Down to this target. They went exactly to the pip and pulled right back up. Now, remember, we've already discussed, we won't trade in here unless we get this target taken out, which they took out here. So from here, my next target is here. I will now trade this. I couldn't trade it before, but because they took it out and pulled back up, I now have 60 pips in there. All right? So when I get the opportunity to trade that, I would trade it. And where do they go? Right down to the line. Pull back up. All right? They have not hit the line yet, so I can't trade it in there. Now they've taken the line out. If I get any pullback, I'm going to here. All right? No pullback. Now I got a break and a hook. When I get to go, this is a big wide open space here. Sideways movement, and down they go, and boom, right to the target. All right? And that's the bottom. Now, can everybody see that what I just showed you is what the market does? You can open up the chat so we can answer that. All right. Everybody see that I just proved to you that that's what the market does. Well, we have to go down on each one of these on a 10-minute chart, Brian, and I'm pretty far in the past. It would be what you always look for, okay? A break, hook, and a go, an arrow, and a painted candle in that wide open space, all right? See? Can I show you the hooks? Yeah, show you the hooks. Here's a break into it, break, hook, and turn and go. Not enough sellers yet. They go back up, turn and go. All right. Here's a break, a hook, and a go. Here's that right here, a break, a hook, and now we go all the way down. See? These are all break, hooks, and goes. All right. A break, a hook, and a go. See? That's what they're doing. So yeah, you need the targets from the previous time in the area you're going to be in, Lori. You need those targets and the right targets. If you're going down, you need to find the resistances in the past in that same price area, because bankers are creatures of habit. They always do what they've always done. All right. So PSRs are related to the current price and the ATR. All right. So if you're here and this is 98.98 and this is 97.71, 98.81 and 97.71 is 120 pips. All right. If it breaks into here right here and it's already done, and let's say the currency does 100 pips and it's already done 100 pips in here, is it realistic for us to think that it will do 200 pips down to here when it breaks here? Is that realistic that it will do 200 pips when on average it only does 100? Right? So that's why we need to know where the ATR is and where we are in that amount. All right. So what do? They put the candles down below, which tells everybody who's a professional trader, boys and girls, we're doing this trade. But we've already done our ATR, therefore we can't get to it now. We'll come back to you later. And that's why they flopped around and they kept coming up and coming up. Why do they keep coming up? Because they need to find sellers. Up to find some sellers. They found some, but not enough. Up to find some sellers. They found some, but not enough. And then finally we get enough sellers in and down we go. Still don't have enough sellers. Up they go to find sellers, down they go, and this time they're probably going to go to target. Yep, they did. See? All right. So that's what has to happen, okay? No, you don't. Thomas, you use fibs on a 240. I'm not talking about that here. I'm just trying to prove to you that the most important targets are PSRs. Yes, there are fibs in here. You will have to find them also. All right. But as the main thing here is, you guys picked this chart. We grabbed a piece of real estate on it, and what we did is we went back and we proved that the market knows where those lines are, and it also proved that the place we should make the trade is always in the wide open spaces. That's the only place. This one goes away. That's the only place we'll make the trade. All right? Where do most traders make the trade? Right in here, right in here, right in here, right in here, right in here. That's where they make their trades, and they get stopped out because they don't know where it's going. They don't know where this is, so they don't do it. At which target we never exit, you just never exit. You limit, all right, by moving your stop, all right. Because if you decided I'm going to limit out right here, that's it. That's the bottom. There's nothing there, and you take your limit off, and it goes 60 more pips to the bottom. You lost 60 pips that you could have easily gotten. Why did you want to move? Why did you want to limit out? Because, man, I want to put this 15 pips in my pocket, man. That's what I want to do. See? And so you said, "I'll limit me to 15." All right? And then the market goes 60, and you go, "Oh, man. Oh, well, I'm a winner. I won 15 pips." You got to quit that. The way you make lots of pips, folks, is quit that stuff. All right? You can't expect a different result by using the same methodology you've been doing. You can't do it, right? You've been grabbing 5, 8, 10, 12 pips, right? That's all you ever get if that's all you ever do. But if you learn to find the targets, then that'll be a whole different ball game, okay? So let's see here. All right. All right. So let's see if we can find an uptrend and do the same thing. All right, so let's go find the currency that's going up. All right, so we have dollar Swissy here. Yeah, pretty much going down. Let me go back here and find an uptrend. Here's a UJ. All right, let's just find this one right here. All right, so here's a nice little move on the EJ right up here. All right, so this is the current move right here. All right, so I'm going to do them here. I'm going to just go from the bottom here to where it is on the top right now. And we can see this is it right here, and this is the bottom. Well, it's down below here. It's a little lower. All right, down here. All right. So we're going to pretend that we don't know where this thing went, but that's why you want to practice it when you can see where it went. You want to practice where you see where it was, so that you can prove that you knew how to find the targets. All right. So here I am. I'm going to pretend I'm going up. If I'm going up, what do I want to find? I want to find my ceiling. So how do I do that? I got to go in the past and find the support in an uptrend in that same price area. All right. I'm going back in the past, and voila, I got one right here. I don't have to go very far. All right. So now I'm looking for support, all right, which is to the left and to the right of one sticking down that creates a higher high. All right. So we see right here, this one creates this higher high. It's a set of twins with to the left, to the right. This one does not. I can't take that one. This one does not. I can't take that one. This one does. I can take this one. This one does not. This one does not. This one does not. This one does. All right. You see that? So I got 1, 2, 3 right here. All right. Yeah, Val, once you get the thing picked up. Oh, thank you. Oh, gosh. Sorry. Wow. Thanks so much for that, Pip. I was not on a 240 chart. So now we'll do this. Yeah, we can still do the same area, but I got to do it off of 240. All right. So we're looking for these moves up here, right here. So now I'm on a 240 chart, and now I can see where these supports are. Let me make the candles a little bigger so it's easier for you guys to see it. All right. So I'm going to point them. I'm going to draw them first, and then I'm going to draw them. All right. So you can see this one right here made that higher high. All right. This one did not make a higher high. All right. But actually it did. We can take this because this was a continuation that created that higher high. There was no support in there, so we can take that one. All right. This one right here started this whole move up to the top, and this one right here created that high. This one right here did not create a high, but this one did up to there. All right. So you see that 1, 2, 3, 4, 5 lines we're going to have right here. All right. So let me put those on. We got one right here, one right here. We got one right here. We got one right here. And we got one right there. All right. So, all right, let's go in the future here. There it is. And I'll take this down now to the 10-minute chart because it's recent. All right. So this is so close that we can actually do the trend. Let's start on the 60 so you see where our trades will occur. All right. We already know where they'll occur, what areas we will trade. Okay. It's pretty simple that we're not going to miss this one right here. All right. We're not going to miss this one if we can catch the bottom. All right. We are not going to take any one of these trades right here unless they take the targets out and pull back. Then we can do it. All right. So everybody see. All right. Down to the 10-minute chart. 10-minute chart. So you can see how the actual trade would be made to the targets. All right. So here we see a bounce off the bottom. If we knew this was the bottom, all right, where are we headed? Right into the desert, all right? But they knew exactly where the target was. See that? Next target. Do they know where that target was? Now, advanced traders could use a 6 aces trade to trade that. As newbies, don't even think about it. All right? All right. So we get a pullback. Ah, that's what I need. Give me that. Because that target's gone and that target's gone. My next target is up here. Wow. That's going to be a big move. I already know that ahead of time. See that? I know that's going to, once it goes, it's going to just start going. All right. They ran each, you see, every time they popped up here, they stopped here because of the moving average, pulled them down. Then we have a break and a hook. All right. Everybody see that? A break and a hook of the moving average. We're looking for that target right there on this trade right there. That's what we're looking for. All right. Let's see if we get it. A deeper pullback, even better, even better, even better. Oh, this is so great, 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 great. Big, big pullback like that. That is your friend. In the past, that was no longer your friend. Now it's your friend. All right, up we go. Got to get out of the desert here. Come on, get out of the desert. There we go. We're out of the desert. All right. So we need a break, hook, and go. All right. So we see that we didn't get any there, so we're going to wait for it to come back down. All right, come down a little bit. A break, a little hook, and now we're going. Now we get the hook. See, that's why you have to be careful of those. All right. They start to move, and then they come back. They actually did the hook back here. See that? Bam. That's why your stop is so critical, because if it does that and comes back here, your stop's still got to be here. You'll live through that. All right. Our trade is this big move up here. See if we get to it. Boom. To the target, and not quite there at the top. All right. Everybody see it? You can open the chat now, Pip. Thank you, Pip, by the way. Thanks always, Pip, for all. Pip is a big help for everybody. You got to admit that. All right. Thanks, Bob. 6 aces is used in the desert, ranging trades and reversing. As a new trader, you don't want to do any of those. So don't even go there. Don't even think about it. Is the pound a hook? I don't know. I'm trying to teach. I'm not looking for that right now, okay? Yeah, exactly, Aspen. All right. Where's the ATR? You put a expert advisor on your MetaTrader 4 platform, and it'll tell you what it is. We use a 14-day. We need a 14-day average. All right, that's where you find it. So go. You do a Google search and find 500 of them. All right. How big a stop was this one right here? The stop would have been, if we'd entered right here at 30.67. Our stop would have been 38. Less 5 would have been 33. 133. All right, 33 right here to this line right here, which was 67, 34 pips. 34 pip stop for a 170, 60, 90 pip potential. 34 pips. All right. By the time you trade the first 2 hours of each session, you got 4 sessions. You got New York, you got Sydney, you got Asian, and you got London. Do not trade the Frankfurt. It's a head fake. I use wherever the high-low is, Femi. It's not important. And everybody gets lost in the minutia. Find the swing high, swing low. It may be on a 10-minute chart. It may be on the day chart. It's wherever the swing high, swing low is. All right? It's where that is. All right? Only the 240 charts, Diane. All analysis comes from a 240 or higher chart. There is no analysis below that. Now, let's talk about, okay, well, you keep saying about the fibs on the 60-minute chart. All right, how do I know where to do that? All right, so here's a swing low, swing high on a 10-minute chart. All right, so we're going to get through 2 things. We're going to get a swing low, swing high, which gives us the retracement area. Here's the 50%. Maybe it'll retrace to the 618, maybe the 786. There's the first target for the fibs. There's the second target for the fibs. All right, so when we get our trade set up at the correct time of day, all right, we will be looking to move our stops. All right, there's where we had the break in the hook. So what do? We're going to move our stops at this 270 fib and the PSR, because this is what we call confluence. 2 things say watch out for that line right there. All right, so we got to move our stop when we get to there. We also got to move our stop at the 131 if we get a trade down here. All right, so if we trade down here, boom, boom, went right up to it, we would have moved our stop right here, protected this profit right here, which at this point in time is 70 pips roughly. We now go up and we catch 90 pips up to there. All right, and that's where we are currently. That's where we were today. All right. So, Elvis, you're just going to have to watch it. I mean, if you're not snapping to it, it's because you really need to do some more work. All right. So, you're funny, Normal. All right, the rule for stop loss is the last support and resistance, whichever way you're going, subtract or add, depending which way you're going, 5 to 7 pips. Whatever that number is, you got to go find an odd number that ends in a 3 or a 7. You never have a stop on an even number. Stops are always on an odd number. Why would that be? Because option contracts are all on even numbers. Therefore, if all of a sudden an option contract is going to get hit and your stop is down here, when it hits the option contract on an even number, it will execute that and it will bounce off of it and you will live through that. See? We don't use 5s because it's half of 10. All right, so don't use a 5. It's either a 3 or a 7. That's it. So, all right, you want me to do another one? Want to do another one? Everybody want to see one more? All right, sure. Pick a currency. Somebody, first one that gets it, gets it. Make it a major, so I don't have to go. First one that types it in. I need somebody to type in GU. All right, GU got it. Pound was the first one I saw. All right, up to the British pound. Take everything off. And in this one, we'll add everything when we get done. I'll add the fibs and the trend and all that. All right, so you can see it. All right. So first up to the 240 chart. All right. So let's take this move from right here. From right here up to here. This move right here. All right. So I can see the top is right up here. This is how you practice it. You go find. I need to find an uptrend, which I got one right over here. All right. So I need to find the fibs from this area. I'm going to pretend now. Make the charts bigger. I'm going to pretend that I don't know where I am in this move. All right. I'm actually going to scroll this back a little further down into here, right to there. All right. So if I was going to find the fibs, I would have to find a swing high, swing low, because I'm anticipating the trend to be up. All right. So we'll put the trend on right there. A little too high. See, I don't prove the heart line here, so I can't use that top. I got to bring it down here. And now I get the heart line proven right there. Those two tops stop right there. All right. Make the price line white. Sure. Give me a second here. All right. Okay, price line is white now. All right, so I'm going to find the fibs. I need them up in this area, see? Now, that's why this is a quandary, because if I take this swing low and this swing high, I'm going to get the fibs down here. That won't help me a bit. See, I need the fibs up here. That's why you got to first know the trend. So I'm going to have to take the swing low, swing high from here up to here, and we'll try that one first. All right? So put the fibs on, swing low, and swing high here. All right. Now, once I put them on, first thing I do is check them and make sure that the market says we know right where they are, 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 we know right where they are. Now, the preponderance of evidence tells me that the market knows exactly where these lines are, so that means I can count on this one, this one, and this one. These are places I'm going to move my stop. I got to prove, yeah, exactly what Pip said. I got to prove that the big boys are using them. If I don't know that the big boys are using them, I got to keep looking. But I was fortunate there. I've done about 50,000 fibs, so it's pretty easy for me. But if you've done 10 fibs, it's hard, and that's why you got to practice them. How many fibs you got to do at one time? How many? 300 up and 300 down, all at one time, and then you got to take 24 hours off. All right, that's it. That's the work you got to do, folks. If you want to be a trader, all right, you never learn it unless you do the work. All right. All right. So now I know where I'm trying to go. I'm trying to go up in this area. I got a top. Where the heck is that top? Oh, there it is. Okay, I got it. I see it. All right. So I'm looking for my ceiling. I'm looking for my ceiling on this move here. Where do I go? To the past. And I find the bottoms over here, the supports over here will tell me where the market is going to try to go. All right, so I'll draw them first, and you can see that low created that high. That's good. All right, that low created that high. I can use that. There's one right in here, to the left, and to the right that created that high, so I can use that one. This one right here, right there, created that high right there. And this one right here created that high right there. All right, so I can use those. All right, so I'm going to go find one here, one here, one there, one here, one here. I think I'm over my area here. Okay. All right. So now, if you were actually trading, you would have to find the ones to the downside because you don't know if the currency might break to the downside also. All right. So here we are. Coming back over to here. This time I'm going to put the HSI on. That's the bottom of this move. It's the first wave to the upside. All right. And as you can see, they already knew where the R5 was right here. They've already gone up to the R5 and taken it out. All right. I can already see the areas I will trade in, okay? So if I was trading off this bottom, I could see I could trade that one right there, and then I could have traded this one right here, moving my stop here. It's already done that. So now I'm going to look for the move to the upside. All right, I can see that I can take this trade from wherever I get this one up to here, right here, because that target's gone and this target's gone. Everybody see that? So wherever I get this trade right here, I got to there. Does everybody agree with me? All right, so there you go. Now, we'll just kind of scroll this over. All right, haven't got the trade. There's the first move to the upside. Let me take it down to a 60. All right. All right, here we are. So we're down here. All right, there's the first move to the upside. We need a pullback. There's the pullback. All right, where are we going? All right, as we noticed over here left, we've already taken this target out right here. We're going to this line right here, and what do we got? We got to move our stop here. We've got to move our stop at the 5200. We've got to move it again at the 5215, which is a Fibonacci 786 fib for the big move. All right, we're going to move it at 5250, and we're going to move it tight at 5268, and we're not going to limit out because they could go all the way through it. All right, so there's a pullback. Best thing to happen to you. Strong pullback. All right, hooray! Come on, baby. Bam! Ready for that? Right to the target. See that? You see, I don't know what they're going to do, folks, but I don't know what, when you tell me put it on a chart, I don't know what that chart is. That's why I want you to do that, because I want you to see that I'm not cherry picking charts. I'm taking whatever chart you tell me, all right? On whatever chart you tell me, and I'll show you that that's what they're doing. Well, if that's what they're doing, we got to learn how to do it, all right? This target's out now, no longer here. This is why we usually do this. Once we know the target's out, we know we're not looking for that one, we're looking for the next one up there. All right, ooh, a pullback. Good night, thank you very much. All right, still getting pullbacks. Pullback. These are the best thing that ever happened to you once you learn how to trade. All right, back up over the 5200. We got a big trade here, all the way up to 5381. Now, if that exceeds its ATR, we won't get there. You see that? The ATR is 112 pips. 5200 to 5381 is 180 pips. All right. So if the ATR is 112 and that's 180 pips, what should we target? Should we target all the way up to here, or should we back it off to here? A or B? We should still target B, but we're going to be very careful when we hit A. That's the last, because that's the ATR. That's what the average movement is. All right, so let's see what she does. Still flopping around, flopping around, flopping around, and the 5250 is really causing problems, as you can see. All right, now we're up, pull back. We got a break and a hook. If we get the go, we're in it. All right, no go yet, no go, no go. Okay, now we got to break the 5283. All right, because we got a strong barrier. There we go. Now we got a hook back. There it is. Okay, now we're good. Give me a buy. Give me a buy. Give me a buy. Not getting one yet. That's okay. There it is. Now, remember what we said? We were going to target this because that's 112 pips. But we're not going to limit out. We're going to move our stop. All right? Don't get stopped out. Oh, gee, went and did it again. Went right to the doggone target. He is so stinking lucky. I'm not lucky, folks. I'm not a guru. I watch charts. That's all I do. I am no smarter than anybody else. I just know what they're going to do, and I'm trying to teach you what they do. The key is you got to get disciplined to stay into those targets. Learn how to put them on yourself, and that takes homework, hundreds and hundreds of hours in the charts, drawing them in the past, so that you have the confidence when you're going to draw them on a current move. You've done 300 of them in the past, and say, I know where they're going, because I get it right now. When I first started, I couldn't find a PSR from a hole in the wall. But now I've done 300 or 400 of them, and you know what? They're doing them. They're moving to my lines. I am getting it. Now when it's live, you got to make a trade. You got to make a decision. You go, I got 85 pips to that target. Why would you ever click out for 5 to 8 if you knew it was going 85 pips? The only thing you don't know is how long is it going to take. That's why you move your stop, get to break even, and sit on it. Do not try to crowd a trade that's going 85 pips with 15 pip trailing stops. You don't want to do that. You will get stopped out on the pullbacks. So you don't do that. Patience. Patience, grasshopper. All right. Now, have we proved the point? Would everybody agree that this is probably what the market does? Would everybody say that's probably what it does? Yeah, but remember, Hoxie, you can't trade that, but I can. I'm a professional trader. I can trade it. We got hundreds of professional traders in our room. They all can trade it. They all can trade it, but you can't. That's why we're a system that starts you as a beginner, and we still, every day, we have 5 to 8 hedge fund managers in our room. Why are they there? Because we make pips. Huh? A 6 aces, again, let me answer it. A 6 aces trade setup is a reversal or a ranging trade. It's what we would trade in the desert. As a new trader, you will not trade in the desert. Therefore, it is not a trade setup for you. But all of our advanced traders use it. All right? That's when they use it. All right? They can trade it. You can't. You're brand new to it. Don't even learn it. Don't confuse your mind. All right? So, is there a Pip Measure Tool? Not on this one. You can still use the one on you just look on the side. You can tell what it is. It gives you the price right over here. Yeah, let me do a channel for you real quick. All right, so let me go to a clean chart here, and we'll do one on the euro. I hate the euro. All right, down on the 240 chart. All right, remember the only thing we care about is the last piece. That's this piece right here. But I'll trend this one right over here. All right, so when we're over here, we need to find the last piece. Let's say this hasn't happened yet. We're right here like this. Or right here we go, okay, what are we going to do? Well, oh, it's going up, so I got to have a trend. I don't need to go way back here. I just need to find the trend of what they're doing now. I'm going to click on the bottom there. I go find the top, right there, and then I stop. And unless they show me they know exactly where that heart line is, then I do not have the right trend. They have it. That's a support. That's a resistance. Is this 8 to 2 on your watch? Is that 8 to 2 on your watch? Everything's done manually. You got to do it. That's what a trader. You're not a trader unless you put stuff on the charts. If you're an indicator junkie, you don't have anything on your charts. You're waiting for an indicator. All right. All right. So I got a 45-degree angle. I have a support and resistance, and I've proven the heart line. Now, why is that important? Because I know where the bottom is, but I don't know where the top is. See? So trends have got to be anchored on support or resistance. Okay. If it blows out of the top of this, then I'm going to have to move this line over to here. All right, then this would end up being the heart line. All right, see? All right, so that's what's happening. That's why we're recording this. You can watch it over and over and over again. Most people watch our tutorials 5 to 10 times. All right, so there's always 2 parts to a trend. What do most traders do? Here's what they do. They go like this. Oh, there's a trend right there. That's a trend. That's not the trend. You're wrong. Then when it breaks up, you go, whoa, whoa, what happened? Well, you didn't have the trend right. No, that's not even, yeah, that's the trend. All right? So there it is. All right? And now we have a breakout of the trend. So what do we got to have? We got to have 3 more pieces. 3 to the downside, 10 to 4. What do we got? 1. Do we have another one? Well, we have one down here, but if we did that, would that be 10 to 4 or would that be 11 to 5? All right? Just contact support, Diane. Yeah, there you go. That's 11 to 5, so that's not a trend. That is not a trend. All right. Now let's look at this. I want to go back to one more thing real quick to kind of put this all together that we just did. Let's just do, what did we just do? We just did the Aussie. Okay. Now remember when we started this? Do you remember me telling you that the opportunity is the unsustainable thrust? Unsustainable thrust. Unsustainable thrust, unsustainable thrust. That trend can be maintained. These pieces cannot. You see that? That's why you got to know where the target is. Gregory, did you just join? Because we've said don't ask about recording again. We are recording this. All right. We're on live charts. These are live charts right now. I'm on live charts. But I'm showing you how to practice. You don't want to practice on a live chart what's happening now. You want to practice in the past. 300 of them. David? 300. PSRs, 300 fibs, 300 trends, all done at one time. So let's just say I'm going to do PSRs up, PSRs down, fibs up, fibs down, trends up, and trends down. That's 6 things. How many days does it take to practice that? 12. 1 day for each, and then 1 day off. 1 day for each, 1 day off. All right, so there. Yeah, we get guys who come in here and they've been trading a while. They go, oh my gosh, that was the answer I've been looking for. Bam. You know, next thing you know, they're making tons of pips. We have one guy, Frankie. Let me show you Frankie here for a second. Frankie came in within 3 weeks, snapped. He'd been trading 8 years, not with a lot of success. And so then he started trading with us. Let me find his broker station. Here we go. All right, you can all be able to see that. It's over 7,000 pips, still in. Still in. 7,000 pips. You see how he builds it? Some of these are 14 days, 20 days, 14 days, building positions in the ends. All right. What's he trading with? 3 minis. 3 minis. Yeah, we'll do that. That's good. 3 minis. All right. That's one of our traders. 3 weeks he started doing that. All right. Well, but he had 8 years experience. See, if you got 3 weeks experience, you're not going to do that. All right. All right. I'll hover over this. These are the tools. All right. We'll start left to right. These 2 tools right here make the charts bigger or smaller, whichever way you want them to go. All right. This little tool here, it's shut off. It adds a study. You're not allowed to do that. That's why they're locked. All right. This is a crosshair, so we can just put a crosshair on and see what that does. Find a price. This is your mouse right here. This does a horizontal line right there. This does a vertical line. All right. This one does a trend line when we're doing channels. See, makes a little. You can draw any way you want to. All right. Now, the one we use for trend is the next one. It's the only thing it doesn't tell you what it is because it's too long to fit. The word for it is too long to fit on this deal. So a channel key is what we're using, like this. All right. The next one is a linear regression. Never, ever, ever use linear regression, ever. Linear regression, all it does is it puts all the candles inside the trend. You don't want that. You'll never see a breakout if you see that. So you don't do that. All right. This is a Fibonacci retracement. And ours, we have added ours and have added channels to it. I mean, extensions. A real Fibonacci extension key is here. Now, let me show you why you can't use the real Fibonacci key in the Forex. You can occasionally, but not very often. A Fibonacci key, let me get off this chart here and go to another one. Fibonacci extension key, just go to the CAD, right, requires that the market give you 3 points. So let's say we want to find the extension down here. We're going to have to click on a top, a bottom, and then we're going to have to find another top to get the extensions. Well, the market doesn't do that in the Forex. It just rocks. All right? So we need a move that goes down here like this, comes back up here like this, and then goes. The problem is we rarely get that. So that's what you got to have a Fibonacci key extension. All right? So, you know, you go here like this, and you'd have to go here, and that's all you'd be able to do is that to there. All right? And you get a Fibonacci extensions to the downside. Not very useful for us because we rarely get what we need to do that. There's an Andrews pitchfork, we don't use it. There's a Fibonacci time zone thing, we don't use it. There's a support and resistance. In the beginning, we use that to block off areas we won't trade. So like we say, okay, I'm not going to trade in that area, and you block it off. And you know, I'm not trading in that area, and you got a way to do that. This allows you to write on the chart, blah, 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 or put arrows on it. I'm going down. So there it is, see? Got to do that. This is the PAT projector. All right, the PAT projector is what we use to find the 55 pip line. So when we get a white dot, for instance, right here, there's a white dot. So we're a seller. You program this to 34 pips, 55 pip stops. I'm going to enter wherever I click 0, and it'll find 55 pips from that white dot. And as you can see, they got within 3 or 4 pips of it right here. That's it. All right. All right. Well, you can see this one did go. We changed this back up to here. I'll take everything off here. 55 pips where the big boys came in. Where did they go? Right there. See? All right, and then the HSI is the last one up here you got to worry about. Don't worry about that paint thing. Just I usually hover over it. Just keep it there. All right. HSI is the tool that we use. If I could find a top, there's a top. I simply click up here, find the top, put it on here, say sell. I want to be a seller. Find the targets. Go fetch the targets, boy. Woof, woof, woof. Off he goes. Finds the targets for me. Down she goes. Down she goes. And if we keep going down, we'll eventually get to there. We'll not keep going down. All right. Does the HSI work? Oh my gosh, does it work? Let me just show you a couple things here. Let's go over this chart right here. This is the euro. Piece of junk. All right. Let's do these two moves here. HSI from the bottom. Oh, you know. What do you know? I wonder if they knew where they were. I don't know. Doggone Scott. So lucky. He's just so lucky. Wow. Where's the wide open spaces? Right there. This is the hardest trade to do. S1 to S3, S2, R2, R1 to R2. Thank you, Pip. Yeah, we got to line it up. We don't want this going much longer like this. I'll do one down, okay? And then we'll be done. See, I don't know. Kind of knows where it's going. Kind of knows where those lines are. I don't know. Maybe that HSI doesn't work. Not very accurate. You know, just all I got to do, I got to be smart enough to find a bottom or a top. See? That's it. All right, folks. All right, we've been going 90 minutes. So that's about as long as we want this thing to go, because otherwise it's too long for people to rewatch. So I'm going to close her down here. Hopefully this has helped you a bunch. All right. All right. All right. Hopefully this will really help you, and you know, you can probably see why it might be worthwhile to hang around for a while. All right. Rules for the daily pink lines. It's what you see, RD. The more you do them, you don't even have to ask the question. The rules are, what do I see? What do I see? Where is the top? And your mind will tell you that's the top. All right, and it's the top you're going to be looking for. All right, so, all right, everybody, have a great day. We'll get the recording. It'll be sent out to you. They got to process the recording, so don't expect it in 5 minutes. All right, it'll be mailed out tonight, so don't worry about it. All right, all right. Best info in 3 years. Thank you, BJ. Appreciate that. All right, good deal. You're funny. Market mover, you're funny. All right, everybody. I will see you later in the morning. I'll see you tomorrow morning. Have a great day, and make it a good one for everybody, okay?